Welcome back to the Crypto Report, everybody. I'm Crypto Kip, and today we are going to be talking about Crypto.com and the Crypto.com DeFi wallet and the excellent rewards you can get via staking. On top of that, we're also going to talk about the big threat to crypto that really just kind of came into a big spotlight here in the last 24 hours. Leading this, recent news was actually Brian Armstrong, the CEO of Coinbase, coming out and talking about how the SEC wants to ban staking. So a lot of great opportunities out there in staking that a lot of us in the Crypto.com community and in the Ethereum community and so many of these other chains that have, staking for these validators. This is all under threat, folks. And so we got to talk about it. We got to talk about what I think's happening. Why the market's tumbling today. It's really all on this, and we're going to talk about why and what to expect. So let's get into the content. If you like the content, smash up like button, subscribe to the channel. We're doing 5 videos every single day for you. And when we hit 10,000 subscribers on the channel, we're giving away $1,000 worth of Bitcoin to one lucky subscriber. So don't miss out on that, folks. Let's look here. Crypto market's down to $1.06 trillion, down about $20 billion today have flown out of the market. And Bitcoin broke below $22,000 for the first time in a couple weeks, which is actually quite shocking to a lot of investors. But, guys, we've been calling bottom on the channel. We certainly do believe that bottom is in still. But I got to acknowledge that black swan events happen, right? News comes out, regulation threats come out. You never know what could happen, guys. So make sure, we're continuing the dollar cost average. We still believe in the future bull run coming around the Bitcoin halving. But meanwhile, today, the markets are tumbling. You look over the last 7 days, Bitcoin's down 7%, Ethereum's down 5%. You look on the day, today Bitcoin's down 4%, Ethereum's down 4%. These are pretty big drops for the day. Relatively, we're still up, guys. We're still up. We're still above $1 trillion market cap. We've been talking a lot about how on this channel, guys, we could see a bounce off the $1 trillion mark here for crypto. And if you look today, actually, we kind of are on the path to try to bounce off $1 trillion. So don't be surprised, folks, if we do bounce off this $1 trillion threshold, or even test below it and then test around it here. So be on the lookout for that. Well, let's look at Bitcoin here today. Looking at some of the weekly candles here for Bitcoin. Yeah, it seems to be coming down. Actually, last week closed red. Here we're in another weekly candle right now that's kind of panning out, and it looks pretty red right now. And so we got to look out for a bounce. Don't be surprised, guys, to see it come down to, 21,000 and change here. Possibly even a bounce off 19,500 again. We'll have to see kind of how that pans out. But we have broken down and out of a channel that we've been trading in here for a while, which is unfortunate to see. But if you do zoom out a little bit, you kind of see we were in this channel here. If I can just draw it for you real quick, where boom, we were kind of trading in this channel. If you look here, unfortunately, we have broken out and below this channel now. And so we're kind of looking to see, where can we hit next? Don't be surprised if we are around, this area where these candles are, or even if we come down and test, some of the previous lows, guys. Sometimes you got a double bottom. So that's certainly possible, guys. But a lot of you guys might be wondering, why is this happening? Well, first of all, there's a great thing you got to know about. If you don't already know about it, you should. What you're looking at right now is the Crypto.com DeFi wallet. For those of you guys that have been watching the channel for a while, this is a great tool for you guys to be earning interest on the CRO coins that you might be holding. What you're looking at is an empty wallet. I'm not showing you my real wallet. I like to keep my funds private, but I do have quite a bit of CRO in the DeFi wallet on my phone. This is the DeFi desktop wallet for Crypto.com. But you can stake your funds. Well, staking actually allows, these validators to exist. So you stake your funds in these validators, and then these validators are the things that confirm the transactions on the network, allowing the Cronos chain to essentially exist. And Ethereum has moved over to proof of stake instead of proof of work as well. And so Ethereum is based on the staking as well. But when you look at like the different interest rates you can get, if you do stake your CRO coin, you can get 9, 10, almost 11% APY returns from all of these different validators and all these different groups that you can join in these staking pools. And this is a great opportunity. One pool I'm in right now is Jerry's pool. It's one of the more popular pools. I'm also in this other one called Finland. I'm in a couple different pools, right? I like to diversify into different pools. But right now, if you want to stake your CRO, Is it risky? Well, we certainly got to take a look at the story that came out. Coinbase CEO came out yesterday, I think it was today, and warned of a staking crackdown. And the Coinbase stock is tumbling on account of it. Coinbase stock's down 14% at the time of this article here, which is crazy to see. And the CEO of Coinbase, Brian Armstrong, warned that the SEC, the Securities and Exchange Commission, might be considering cracking down on a process called staking. Any potential move would be bad for crypto's currency brokers business and likely hurt Ethereum, of course, because Ethereum is a proof of stake mechanism. And they think that it could hurt the largest crypto, Bitcoin. Okay, so Coinbase stock is tumbling right now. Folks, if you don't know what it is, staking refers to a process that it both underpins blockchain networks and offers investors a way to earn yield on crypto holdings. It is not something they do for Bitcoin, but it's a big part of Ethereum. Ethereum holders can lock up or stake their tokens in a collateral process that validates transactions and secures the network, earning money in the process. So these are these yields we're talking about you can get for the Cronos chain on your crypto.com tokens. Right now on Ethereum, you can earn up to 5%. On Cronos, you can earn 10 or 11%, which is great to see. But this is a big threat right now, guys, and this is the fear. So Brian Armstrong said, quote, "We're hearing rumors that the SEC would like to get rid of crypto staking in the U.S. for retail customers." Key words. That would be horrible for you and me, but retail customers. So in other words, if you have millions and billions of dollars, you're an institution, you can still do staking. But if you're a retail customer in the the U.S. government wants to protect you, aka stop you from being able to earn money passively and participate in the crypto community by staking, which is absolutely ludicrous. And Brian Armstrong also said on Twitter he hopes that's not the case and believes it would be a terrible path for the U.S. if it was allowed to happen. This would be terrible, guys. I don't think this is going to happen. I think this is, yes, a black swan event, but I also think that it's FUD. That being said, there is legitimate reason to be concerned about it because crypto exchange Kraken settled for $30 million today, and they are actually going to close their U.S. staking operation, which is very, very interesting to see. Now, Kraken doesn't have its own blockchain, so it's not quite the same, but it's going to be very interesting to see how this news plays out for Ethereum and the Cronos chain, and then, of course, crypto.com, which does have an earn product as well. The SEC said Kraken failed to register this offering and the sale of crypto asset staking as a service program. So SEC won this case, Kraken settled, and there is a loss here. So there is some fallout, folks. There's some fallout, and that's why you're seeing the price of Bitcoin and crypto crashing today. I believe that it's still a buying opportunity. We saw the rumors about the bank runs on these crypto exchanges during the FTX fallout. What happened? The price has rebounded. I still think the same is going to happen. Just because retail customers may or may not get boxed out of staking in the US, that doesn't mean that it's not going to happen worldwide. And so these are global chains, folks. Global chains. They happen across the world. If anything, if this did happen in the US, it would hurt the retail investors in the US, yes, and we wouldn't be able to earn the extra yield, but it still wouldn't stop us from being able to buy the tokens. And it wouldn't stop people from across seas to be able to take advantage of the opportunity as well. If anything, this would give the US a disadvantage, and tax collectors in the US would not benefit from this. You know, there's a lot of other things to look at when it comes to this as well, guys. But here's one point I want to make. So if you look at the top 10 chains here, and you look at the amount of value that's locked up in these ecosystems, $50 billion locked up into Binance, $6 billion locked up into, $50 billion locked up into Ethereum, $6 billion locked up into Binance. All these chains, guys, all of these chains use proof of stake. These use staking, and crypto.com Research and Insights just came up with, more information about staking. So meanwhile, companies are still working on improving the staking. These chains are still working on getting better and offering more staking opportunities. Meanwhile, this threat's going on. And there's a great tweet that came out by Coinbase today, and I want to read a little bit of it for you. So with the recent regulatory spotlight on staking, Coinbase is taking the opportunity to build a deeper understanding of staking and its transformative role in processing digital finance transactions. Staking is a method of verifying and securing financial transactions with software code. It's a faster, more energy efficient, and accurate. Most importantly, asset holders get rewarded for participating in the verification process instead of just the banks, right? Instead of just the banks and your transaction processors, your middlemen who like to make money off of you without you being able to have a a role in the process, right? Traditionally, if you purchase something with a credit card or a check, it takes a number of organizations to process that payment. Staking leverages a large global community of asset holders, you and me, and validators to strengthen the checks and balances. Running these transactions on code that works on a trust but verify method across a large community of validators is far more secure than placing trust in a few centralized entities, aka banks and billionaires, okay? All it takes to become a part of the validator community is a laptop that runs code. This model is extremely energy efficient and can scale faster than setting up physical entities such as large data centers, okay? For example, Ethereum, the second largest blockchain after Bitcoin, uses staking. Billions of dollars into complex transactions like lending and payments are processed without any centralized institutions involved. In return, you can earn 3 to 6% APY in these staking opportunities. Worldwide digital transactions are set to go from $8.3 trillion in 2022 to $15 trillion by 2027. As the global economy digitizes, being able to verify large volumes of transactions accurately and quickly is indispensable to a sound financial system. And that's where staking comes in. Staking has the potential to accelerate the adoption of digital payments globally because it is not dependent on setting up expensive centralized intermediaries. This is so true. We do not need centralized and expensive intermediaries. Instead, we can do it ourselves and we can take a piece of the action by staking and earning APY. But no, the powers that be do not want you to be able to do that, at least here in the US. With 4 of 5 Americans using digital payments, the United States stands to lose from driving staking operators offshore and simply cannot sit this innovation out. These are great points, and Coinbase is pushing education materials right now and trying to get the U.S. to reconsider. The fact of the matter is guys, Gary Gensler and the SEC is on the attack for cryptocurrency, and it's really, really sad. And I don't think it's going to happen. I think that it's FUD. I think it's fake news, to be honest with you. That being said, you got to look at Kraken settling with the U.S., and you got to take acknowledgement of that. Banks under pressure from the U.S. authorities to cut ties to crypto firms. This is the other thing we see. The banks are getting threatened by the U.S. authorities, specifically the SEC. Hey, don't deal with crypto. Stay away from crypto. And you look at some of this. The regulators threaten and bully bank leadership behind the scenes, then publish public guidance stressing that banks are still free to custody crypto service clients. In reality, they're not free to do this by any means. They're de-incentivizing everybody because they're going to hurt you essentially behind the curtain if you do get friendly with crypto, because the banks are threatened by it, folks. And so if you're staking your CRO coins, could that be coming to an end? Do you guys believe in this FUD? Let me know in the comments down below. I believe that this is going to scare the markets in the meantime, and then they're not actually going to be able to box it out. I don't think that they can actually control whether or not we do staking, folks. Brian Armstrong came out to Twitter with this. He is upset, and he has all the right in the world to be. This is a big part of their business. This would not be good for their business, which is why the Coinbase stock fell today. This wouldn't be good for Crypto.com's business either, which is why all the coins and all these exchanges are, fretting right now. But again, guys, I do think that it's FUD. The consequences for the crypto industry could range from reducing retail holders' ability to exchange coins for the dollar, in addition to crypto exchanges closing operations in the U.S. market and a lack of access to financial innovation, which wouldn't be good. What do we want to go back to the dark ages here? The banks are establishing a power grab, and they're in with the politicians, and there's an effort here. I don't think it's going to fly, folks. I don't think it's going to fly at all. When you do look at the things that Binance and some of these other exchanges have been doing and getting regulatory approval, Crypto.com's been doing a great job with some of the most licenses in all of crypto. I don't think that they're going anywhere, folks. Now, Kraken's getting hurt today. I see that happening. They settled with the SEC. They're shutting down the staking operations. That's fine. You know what? I think it's going to happen, guys. There's going to be other exchanges that do collapse here. I don't think Crypto.com or Binance are going to be any of these players. But this is the fear you see going on in the market today. Now, not financial advice, folks, but honestly, folks, I do see an opportunity here. When we watch these markets and we look at this crypto market cap fall so quickly, these are the times when you want to buy the dip, guys. If you look at the Bitcoin Fear and Greed Index right now, fear is high and greed is not so high. When you want to buy crypto is when everybody's fearful. And right now, everybody's fearful, guys. So stay posted for the story. We have a live stream coming out tonight at 5:30 p.m. Central Standard Time. Blacksea and I are going to talk more about this. We're going to talk more about some of the new updates, some of the more exciting things, not bearish things that are happening in crypto. But I wanted to give you guys this update today. If you haven't taken advantage of this dip already, it's quite down. I think there might be more downside. So dollar cost averaging slowly, guys. Be safe. And if you haven't taken advantage of staking, it's still out there. They haven't canceled it yet, guys. So take advantage of these APYs if you haven't done so already. I don't think they can cancel validators. I don't think they can cancel staking. Do you? Let me know what you guys think in the comments down below, guys. Thanks for tuning in, guys. If you haven't done so already, make sure you guys do subscribe to the channel. We're doing 5 videos every single day. And at 25,000 subscribers, we're giving away a loaded lion to one lucky subscriber. If you are a member on the channel, you get an additional 10 entries to this giveaway for each month you're a member. All you got to do is go to our YouTube channel to become a member and join, also using the link in the description down below. If you do want to open up a leverage trade and take advantage of this crazy volatility we have, there's also a sign up for you guys for BitGet. Up to an $8,000 sign-up bonus when you sign up for BitGet. So check it out, guys. That's all I got today. I'm Crypto Kip. This is the Crypto Report. Don't forget to smash up the like button, subscribe to the channel, and as always, you got to remember, folks, to DCA, especially when there's blood in the street, folks. I'm not giving up on crypto. I'm still bullish. HODL, because it ain't over, folks. It is just getting started. And as always, we'll see you in the next one. Thanks so much, everybody. I got 2 videos for you right here if you want to check them out. Peace.